Good day and welcome to the IFIA webinar for Brazilian Managers Conference Call. Today's conference is being recorded. At this time, I would like to turn the conference over to Mr. Pat Lardner. Please go ahead, sir.
Thank you, and good morning everyone and welcome. We're delighted that you've taken the time to join us for what we hope is a very informative session. Our objectives really over the course of the next 45 minutes or so are to provide you with a much clearer picture of what we are doing in the Irish funds industry to allow fund managers to connect with investors cross-border. We're very happy that we're joined by a range of very, very experienced speakers in this regard, and we will have time for Q&A at the end of the session. We also have been very heartened by the fact that the expressions of interest and the number of registrations for this conference have really exceeded our initial expectations, with over 100 people registering. So again, thank you very much for your interest. We had an important step in the Irish funds industry last year when we opened our Brazilian representative office in Sao Paulo. And I'm delighted also that Renata Buzan from the IDA, the Industrial Development Authority, a part of the Irish government, is also joining us as a participant on the call today. In the course of the next moment or two, I just want to provide a little bit of backdrop and a little bit of a framework from which we can have a discussion about what Ireland can offer. Just on the first slide there, for those of you who may or may not be familiar with Ireland as a country, we are a small but a very flexible open economy. We're a member of the EU, the European Union, of the OECD, and we're a very full and active participant in every sense in the international financial community, whether that's through things like IOSCO and international securities regulators, the Financial Action Task Force, whether it be as a signatory to FATCA with the United States. So it's very much been the hallmark of the industry here over the last 23 years that we've been in operation to be very, very international in our outlook. And that is by virtue of the fact, as I said a moment ago, that we are indeed a small and open economy. The country here and the industries within it provide a very crucial gateway linking international markets from right across the world. And knowledge-based industries have been very much at the center of this. We've had leadership positions in information technology, in medical devices, in pharmaceuticals, and lastly, but by no means least, in financial services. You may well have been aware that over the course of the last couple of years, there have been a number of difficulties that have been faced by countries within the European Union. And indeed here in Ireland, it has been commented that we have actually faced difficulties too. I'm very glad to say that a very proactive and responsible approach by our own government here, in cooperation with the international authorities, has meant that Ireland experienced last year, in 2012, its best ever year for foreign direct investment, which demonstrates the fact that many companies and many businesses are putting down very significant physical roots in this country by way of both physical and capital investment. On the very bottom of the page, we just give you a little indicator as to one measure as to the road that we've traveled, which looks at the 10-year yield on Irish government bonds. Indeed, the Irish government reissued 10-year bonds back in March at a yield of 4.15%, indicating one very, very clear progress to a full re-entry into the international capital markets. And given the oversubscription of that particular issue, it was a very, very clear signal that the measures that have been taken here have been widely accepted and indeed applauded by the international community. Turning to the funds industry, as I said, as a small open economy, we indeed are an international industry based in Ireland. And that's very important in respect of our relationship with the government here and with the authorities, because given that as a relatively small country in geographical terms, we are meeting a very important global need of investor savings, and the fact that we are exporting services which do not have a direct link to domestic demand, it means that we are creating very, very important employment, revenues, and also we are also providing a very strong platform to promote the broader offerings that Ireland has in serving the needs of fund managers like yourself and indeed companies from all over the world. At the very bottom of that page, we've actually just taken a quote from our Minister for Finance. He spoke at our annual conference last week, and he was very clear to point out the importance of the industry and that the government has been, over its 20-year life, and continues to be, a very, very dynamic and active supporter of what we do. That has very, very important implications for the way in which we can allow, as some of my colleagues will go go into in the next number of moments, the way in which you can set up a fund, the way in which business operates here. The next page has a graphic or a schematic of the industry, and at the very top of it is the most important people really from our industry's perspective, and that are those 915 fund promoters, of which about 440 of whom have actually chosen to domicile fund products here. They are the clients of the industry. It is by meeting their needs that we actually have survived and indeed thrived over the last number of years. The reason that has happened, if you turn your eyes just to the bottom of that slide, is that here in Ireland over those years we have developed a very deep and broad network of expertise from the advisory community in terms of establishing a fund, the audit assurance, taxation advice, for those trustee and custodian banks that provide very important services, particularly in a world where the role of the depository is becoming increasingly relevant and important, and a number of specialist administration companies. So whether you choose Ireland as a domicile in which to house your fund to reach those international investors, or indeed decide that there are specialist services that we can provide that will help your efforts in that regard, we believe we have a broad offering. In the middle of the slide, you can see a number of statistics. We have over 12,300 funds here in total, of which just over 5,300 are Irish domiciles. We are here in Ireland today administering 2.3 trillion euros in assets, of which 1.3 is domiciled. And very importantly, and a key success factor for you as managers, the funds and the frameworks, which Paul will speak about a little bit later on in detail, are internationally recognized, internationally accepted, and absolutely used in the distribution of product to over 70 countries. The factors that drove the growth of the industry in Ireland are not actually just specific to Ireland. I mean, we've had very importantly in the last 25 years the development of fund frameworks or product frameworks that allow international distribution. And the idea of a passport where a fund that is authorized in one jurisdiction can be sold and distributed to others is key. That also coincided with clearly a growth in investment markets in the 80s and 90s, and the globalization of the industry and the broad acceptance of the UCITS brand, which is a key component of what we do here. Locally, though, as I mentioned, the support of government, the very, very firm belief that an open, regulated, and transparent environment is one that would be important not only to investors, but to those fund managers and promoters that we're seeking to attract them. And I would say we have been very fortunate in that we have been able to assume a position of thought leadership, whether that be in providing the first regulated hedge fund product, in our specialization in ETFs, in our ability to deal with the broadest range of strategies and structures that one might need to have. The next two pages really just show our total assets under administration, and we've only put that chart going back to 1998, but interestingly, despite some fairly choppy investment markets, particularly in the latter end of the last decade, in only 1 year in 23 years has this industry seen a decline in assets under administration. Indeed, in 2011, when there were net flows out of funds and out of UCITS across Europe, here in Ireland, we actually experienced inflows. That's a testament both to the strength and range of managers that have chosen the jurisdiction, but also the range of services that we hope are very complementary to what they're doing. And finally, before I hand over to our next speakers, we've just given an indication of the breadth of the distribution reach that we have for Irish funds, a key component and a key success factor for you as managers. So with that scene setting and opening, I'd now like to hand over to Antonio Nascimento and to Marcia Rothschild, who will bring you through our next section, Why Do Fund Managers Set Up Funds in Ireland? Over to you, folks.
Thank you very much, Pat. So good morning and good afternoon to everyone. Thank you very much for joining this webinar. Pleasure being here. So if you go to the next slide, we can see that the key parts of the fund itself is really critical when you create a structure in Ireland. So we need to differentiate between what you hire or you perform in Brazil versus Ireland. So when we talk about Brazil on the left-hand side, usually we have the promoter and the investment manager as two, or they can be two different entities, but when we talk about Brazil, they are the same entity. I mean, the investment manager is the promoter. And usually the investment manager, of course, is based in Brazil and does not need to have a local presence in Ireland. What is important to notice is that the investment manager must be, let's say, regulated in their home jurisdiction, in that case Brazil, and they are focused, of course, on the portfolio management of the fund. The fund itself, they need to be, of course, in Ireland, and most of the funds, they are self-managed, and when they are self-managed, there is no need for a management company. And what replaces the management company is the board of directors. So that's the importance when we differentiate here management company and board of directors. So when it's a self-management fund, and most of the case it is a self-management fund, you need to appoint a board of directors where at least 2 Irish resident directors should be appointed, and usually the chairman of the board is from the investment manager entity. When we look to the right-hand side, I mean the services or the entities you need to hire in Ireland, of course you need to appoint a custodian or a trustee who would be safekeeping the assets of the fund. And the custodian, is important to mention, that must be a credit institution authorized in Ireland, which in most of the cases the big names are. Also, the administrator is responsible for the, let's say, NAV calculation and final check, and the maintenance of the shareholder register. So it's an important duty and role here performed by the administrator. Most of the time, the administrator and the custodian can be the same entity, which is the case for BNP Paribas. And of course, you need to appoint auditors and legal advisors. All the big firms are based in Ireland. Usually, if you don't have any indication in terms of auditors or legal advisors, I think it's important to rely in your service provider who would be able to indicate to you the correct names or the appropriate names to identify, but most of the, let's say, big names are established there and they're globally known. If we move to the next slide, setting up an European fund structure, considerations for asset managers. I think the first bullet point is really important. Do your homework. What does it mean? It's really critical and important that the investment manager comes or goes to Ireland and do, let's say, on-site visits with service providers, with regulators, with industry representatives who could guide and indicate all the intrinsics about the market, how the specificities of the market are guided in Ireland. It's a very dynamic and rich city, but it's very small, so that's good because everybody knows each other. So you can be in one trip visiting different providers at the same day and establishing yourselves and connecting yourselves with the key stakeholders in the region. Also very important to have a distribution strategy. We see different types of distribution strategies coming from Brazilian asset managers. So it's important to identify where you will distribute the funds, who will be the investors of the fund, and who we want to distribute it to. So is it a Brazilian strategy to be distributed only back in Brazil? Is it a Latin strategy to be distributed in Europe and Asia, where you need a cross-border distribution solution? So it's really important to identify and harmonize your distribution strategy with the fund. Also, regulation itself. Irish regulation is very, let's say, strict as the others for fund managers, and it's important to understand what are the main aspects of the regulation. Of course, rely on your law firm and your provider and your auditors, but it's important to have a background and a knowledge of the regulation itself, so you can run your fund in the most appropriate way. Of course, we have a lot of updates on the regulatory aspect being implemented in the last years, which will be impacting, of course, funds in Ireland. So it's important to be regulatory compliant with the new updates on the market. and also understand the operational aspect of the fund. So sometimes it's really, let's say, easy for a fund manager to establish a strategy and launch a fund, but the operational aspect of the fund is sometimes very critical. So how the fund will work, how the fund will be performing, I don't know, NAV calculations, redemptions and subscriptions agreements, the cutoff times you need for the fund. Is there any specificity about the asset itself, like derivatives where you need special treatments? So it's really important to have a complete overview of the operational flow of the fund itself, and to rely on your service provider to be able to guide you and be close to you and inform you of all possible solutions according to the local Irish regulation. I'll leave Marcia Rothschild to present the next slide.
Yeah, thank you, Antonio. Good morning, everyone. Before I begin, again, thank you to the IFIA, my colleagues on the phone. It's a pleasure as well to be on this panel. I'd just like to compliment, before I touch on the points, excuse me, I just clicked one slide too fast. Before I touch on the specific bullet points of this slide, I'd just like to compliment some of the points that Antonio made. I think that due diligence trip that Antonio and all of us here on the phone really recommend is critical, because when I mention due diligence, I don't mean just getting fee proposals from your service partners and providers that you will appoint in Ireland or any other jurisdiction. Today, I think that the managers have an impressive menu of choice, and the decision on who they select is really a critical one. And I think some of the things that I also would like to comment on during that trip is really, you need to find out, in addition to all the operational aspects of the fund, the day in the life, and all of those very important points, is also experience of the different service providers. And I mean the custodians, administrators, any professional firm that you'll be selecting with the specific needs of Brazilian managers. I think Brazil is a very highly regulated country. Brazilian managers have very specific needs in terms of reporting. All of the Brazilian managers are regulated. The funds have daily NAVs. And I think it's key to select people that are actually experienced with the country, that are familiar with the local regulations, the reporting requirements, because they will need to support you as you launch your fund. And in my experience, I think one of the main roles also of the service provider in Ireland will be able to translate international concepts and regulations into terms that are understood in terms of in Brazil, and vice versa. And I'm not speaking about just the language per se, but really the environment and the way we do business in Brazil versus the other jurisdictions. Simple things such as, what is a boleto bancário? My colleagues in Brazil know what I'm talking about, but it's a very traditional payment method in Brazil that very few people outside of Brazil even know what it is. And the different cutoff times that the CVM requires, and the responsibilities that the local administrator and custodian in Brazil will still have, even for the assets held abroad, for example, in case you have investors in an offshore fund that are from Brazil. So those are really things that you should consider when you talk to the different providers you're contemplating hiring as part of your due diligence trip. The other things, of course, is can they handle the instruments you're going to trade? Can they provide the reports that you will need to have? In terms of service, are they present in Brazil? Are they in addition to Ireland, so that they can connect the dots and help you as well? I think this has been key in our experience in servicing Brazilian managers that are branching out of Brazil. So for me, the due diligence is really a critical component of that process. In addition to that, and on this slide you see the tax considerations. Of course, we recommend that you consult with a tax advisor to look at the tax considerations, not only for the fund but also for the investors of the fund. As Pat mentioned, Ireland is a domicile that is recognized by the CVM as having the same parameters and the same infrastructure and regulations as Brazil. So, and also an extensive taxation treaty. So this is really a big benefit for Ireland. Cost and total expense ratios, I think this is key as well. You need to find out very early on in the process what will be the cost for setting up the fund, of course, in year one, but then going forward. And here we can spend quite a few minutes talking about this because there are different views. Some asset managers, they're launching offshore funds. They have the view that is a build and they will come strategy. In other words, have the structure ready for the demand, establish a track record, and of course with the AIFMD coming up in July, quite a few managers are actually applying to set up funds in Ireland to already benefit from grandfathering, and I'm sure Paul will touch on that as well. So there are different views as to whether you should have the structure ready while you do that, while you test the waters, or should you wait? And then once as you do your research, then you will set up a fund. There are different views. I think you have to decide what your strategy is, but bear in mind the cost, of course, to support the build and they will come strategy if that's what you decide to do. In terms of timelines to set up a fund, again, this is extremely important. How long will it take, and how do I work efficiently with the different parties that you will be working with to ensure the fund is set up on time? Timing is critical, and very important. This last point is very important, and I think people underestimate this. It's really what project management resources do I, as an asset manager, require in order to set up the fund. Quite often, I think firms underestimate the amount of time it takes. You really need to dedicate your resource on your side also to work with the various parties. We have an appendix with the timeline to establish a fund, so you have more information on that. I'll give it back to Antonio.
Okay, Marcia. So basically, from all we said until now, of course, at the end of the day, what is important to mention is what type of funds can be established in Dublin, what type of strategies can be done. So we decided to create or have two case studies where we would say are the most common strategies or vehicles created in Dublin. So the case study number one is basically a Brazilian fund manager creating a UCITS fund domiciled in Ireland to distribute this fund to Europe and Asia, which has been, let's say, very popular in the UCITS landscape. Although UCITS, most of the time people associate with Luxembourg, it's very important to mention that Ireland is totally fully able to support UCITS funds as the same way as Luxembourg, and even though it's sometimes faster and cheaper, so I think it's important to have Ireland as a point of contact and jurisdictions for these type of funds. So basically, when you set up these type of funds, UCITS funds, so the UCITS itself, the fund is based in Ireland under the UCITS regulation and regulated also by Central Bank of Ireland as a fund under the European Union Directive. So the investment manager is based in Brazil, and the strategy itself is to create a UCITS fund, which most of the times are dedicated to retail, but cannot only be retail, of course, can be institutional, but if you want to, and if you have a European Asian investor base through your European Asian Securities office or international office where you distribute these funds to them, you can access those markets through a cross-border distribution strategy where you have these Brazilian or Latin strategy and you sell them to the European and Asian investors. It's very easy, it's very common, it's very, let's say, sophisticated in terms of UCITS, and it's very usual for European asset managers, and we are seeing these more and more for Latin American asset managers like Chilean, Peruvian, and nowadays Brazilians, where we still don't have many UCITS funds, but we are seeing a more and more interest from Brazilian asset managers for UCITS funds. I think it's UCITS itself, it's a directive. It has many topics and rules behind it, but it's important to say that it's a very well-known and established passport fund to distribute in Europe and Asia. It's the best, I would say, transparency and efficient way to have it. So this is one example of what can be done with UCITS fund. Marcia has a case study on the next slide that is more dedicated to a quick strategy, so I'll let her explain a bit.
Yeah, the second case study is a different type of structure, which is the QIF, or Qualified Institutional Fund, which is marketed specifically to institutional investors. We see a huge demand for this type of structure. Again, I think we as service providers, especially on the custody administrator side, we will support the structure chosen by the client vis-a-vis, what's more important what's more appropriate for your target investors. But I think we see from our experience a very large demand for QIFs. I think there's several advantages if that's the appropriate vehicle in terms of the fast track. You can get actually a QIF approved in 24 hours. There are very few investment restrictions, so that gives managers the flexibility to execute their strategy, and it's mostly the vehicle of choice for alternative funds such as hedge funds, funds of funds, private equity, real estate. So important to mention that the QIFs are non-UCITS funds, but they are of course still established under domestic Irish legislation, and they are regulated by the central bank. So basically, the solution is fund manager in Brazil establishes the QIF, which as I said, is regulated by the Irish laws. The investment management activity, just like the previous case study, takes place in Brazil. All the servicing of the fund is still in Ireland as the others. Again, same setup. It's really more the target audience for this fund. It's really marketed to institutional investors versus the most typical retail, as we see in the case of UCITS. And as I mentioned before, the fund managers, they have much more flexibility in determining the composition of the portfolio and executing those strategies. And the fast track is a very important benefit of the QIFs. And again, as I mentioned before, we see quite a few managers, not only from Brazil but from Latin America as a whole, already applying for QIFs in order to have the structure ready before the IFIMD goes live in July. So that's basically the basic setup for a QIF. Paul will get into more details in the next slides. Paul?
Thanks, Marcia. Thanks, Antonio. So as Antonio and Marcia have addressed, the two most popular fund products in Ireland are the UCITS product, which is a European passportable mutual fund, and the Qualifying Investor Fund, which, as Marcia mentioned, is designed for institutional investors, and soon will become the Qualifying Alternative Investor Fund, a product that can avail of the European Passport for Alternative Investment Funds pursuant to the Alternative Investment Fund Managers Directive. If we move to UCITS funds first, as Antonio alluded to, the UCITS product was created or is created pursuant to European Union Directive. Now, the UCITS product is truly a global brand. It's truly the global mutual fund outside the United States. In addition to being able to passport the product and sell it publicly across the 27 European Union member states, it's now possible to register it for public sale in up to 70 jurisdictions across the globe. So obviously a product that's very familiar to investors in Asia, Africa, Europe, South America. In the context of the product itself, as more and more investors become familiar with it, it becomes a product that's easier and easier to distribute. So, for example, if you are looking to sell your UCITS product to an institutional investor, when you go to the investment committee, they will immediately recognize and be familiar with the UCITS product. And so what they're focusing on is you as an asset manager and your strategy, rather than trying to figure out your structure, the jurisdiction it's set up in, etc. So it makes the sales process a lot easier for you. In the context of Brazilian asset managers, what we've seen is they've used UCITS products either to target Brazilian citizens living abroad, particularly in Europe and Asia, or they simply sell the product as an opportunity for investors to get exposure to Brazilian asset managers and the products that they offer. Antonio referred to Ireland's success within the UCITS sphere. We've been extraordinarily successful over the last 3 years. In fact, we've been the fastest growing UCITS domicile in Europe over each of the last 3 years in the context of assets under management and growth. So from the perspective of a UCITS product, Ireland is definitely one of the preeminent jurisdictions. In the context of timeline, as Antonio mentioned, we have a big edge over all other European Union jurisdictions in the context of timeline. Establishing an Irish UCITS product will generally take about 8 to 10 weeks to do so. Obviously, that depends a little bit on the complexity of the product, but it is quick and prompt. When you compare that to, say, other jurisdictions, for example, Luxembourg was alluded to, in many cases you might be looking at a process that might take 5 to 6 months, so there's a significant advantage from a timeline perspective in Ireland. I would also say that I would agree with Antonio that it is faster and cheaper. Obviously, part of that relates to the timeline in getting the product established, but also in the context of the responsiveness of the service providers in Ireland and their reactivity that certainly helps to lower costs. In the context of the UCITS product, etc., itself, it's obviously a conservative product. It is a mutual fund product. It is created pursuant to European Union directives which set out those investment restrictions. But in exchange for that more restrictive ability in the context of investment scope, it does provide your potential investors with certainty. They know exactly what UCITS funds can do in the context of their strategies. That gives them great comfort in the context of making their investments. UCITS funds invest in transferable securities, so liquid securities. And in that regard, liquidity is a key feature to UCITS products. Generally, with the UCITS product, you see daily or weekly liquidity, although you can set up UCITS funds that only deal once every 2 weeks. But it has to deal at least once every 2 weeks and provide investors with the ability to subscribe and redeem in that period. In the context of borrowings is limited. Again, that's set out by the directive to 10% for temporary purposes. But you can achieve a degree of leverage through the use of financial derivative instruments. So there is flexibility there, and certainly some of the more complex users do actively use derivatives. In the context of eligible assets, obviously, I've mentioned sort of transferable securities, liquidity. You can also invest in money market instruments, financial derivatives, deposits, and indeed other funds, although 70%, if you were a fund of funds, for example, 70% would have to be UCITS, and the additional 30% could be non-UCITS, but they need to provide the same level of protection to investors that the UCITS product will provide. You'll note that there are some ineligible assets. You can't invest directly in gold, property, or commodities. But having said that, you can gain exposure to these asset classes. For example, you can gain exposure to commodities through derivatives, taking exposure to commodity indices. You can potentially take exposure to property or gold through investing in companies that are active in those areas, either buying shares in those companies or indeed acquiring debt. It's a product that's continuously evolving. So in the context of the directives, obviously there was initially the first directive. Since then, and more recently, there's been the third UCITS directive back in 2003. What that did was enhance the product scope and the investments that users could make, for example, introducing investment into derivatives. And then more recently, there was UCITS 4, which enhanced the product again, particularly in the context of passporting across Europe, making it a very efficient 10-day notification process. So it is an evolving product, and in that regard, we are waiting for UCITS 5 to be implemented. What UCITS 5 proposes to do is bring the UCITS product more in line with the AIFMD regime, particularly in the context of depository or custodial liability and the remuneration of investment managers. So in the context of liability, The aim of the directive is to enhance the liability regime so as to introduce a form of strict liability for custodians, whereby unless they can show that the loss of an asset that they were safekeeping or the subcustodial network was safekeeping was due to an external and unavoidable event, they do need to replace that asset, thus providing a greater protection to the fund and its underlying shareholders. In the context of the remuneration of investment managers, the logic behind the directive in the context of that remuneration piece is basically to align the interests of the investment manager more completely with the fund so as to ensure that there isn't a short-term thought process applied to immediate gains in the context of the fund that might ultimately cost the fund money at a later point. Finally, there is already talk about a UCITS 6, which does again demonstrate how this product is continuously evolving, and UCITS 6 will, we expect, focus on the products that a UCITS fund can provide for the strategies that it can follow. Moving then on to the non-UCITS QIF, as you'll see, obviously the UCITS product is really a risk-adverse product. As I say, it's a mutual fund, and then the non-UCITS QIF is really on the other side, where it is a very flexible product designed for the institutional investor and taking account their sophistication in the context of strategies that it can pursue. So, as Marcia mentioned, the QIF product does have next day authorization, so it's a very quick product to establish. It is extraordinarily flexible. Basically, it has very, very few investment restrictions, which tend to relate specifically to strategy, and it has absolutely no borrowing limit. So it's really left up to you as the asset manager as to the restrictions and limits that you're going to apply to the fund and to the strategy you follow. It is designed for institutional investors, basically investors that can invest over €100,000. And as Marcia mentioned, the type of products you see within the QIF regime are hedge funds, fund of hedge funds, private equity funds, property funds, etc. It can be a highly liquid product, so we have that greater flexibility in the UCITS regime where this can be a closed product where there's no redemptions. It can be limited liquidity where perhaps you might only be allowing shareholders to redeem once a year, or indeed it can be an open fund that deals on a regular basis, for example, daily, weekly, monthly, quarterly. So again, great flexibility. In the context of the product itself, I think we feel in Ireland that it is a truly viable alternative to the Cayman Islands. Clearly the Cayman Islands has traditionally been the preeminent product in the context of Brazilian hedge fund and private equity focused asset managers. And indeed, obviously Cayman Island products, because of their lack of regulation, are cheaper to run on an ongoing basis, perhaps a little bit quicker to establish. But the advantages that the Irish product brings are, well, first of all, this is a regulated product. So that brings a lot to the table in the context of selling to your investors. And secondly, the Irish product doesn't have the uncertainty that the Cayman Islands Delaware subsidiary product has in the context of Brazilian tax authorities and whether or not they will look through the Delaware subsidiary and note that ultimately it's really a Cayman product. In the context of the QIF product, they will see that it is an onshore fund, and so there isn't going to be that potential issue with Brazilian tax authorities. Ireland has always been a whitelisted jurisdiction, both by the OECD and the United States, primarily due to our transparency and the fact that we don't have stringent banking secrecy laws. And so that, in the context of Brazilian tax authorities, is extraordinarily acceptable. And obviously, with the Cayman blacklisting and the use of the Delaware subsidiary to avoid that, there's always a concern that the Brazilian authorities will decide to look beyond that, and Ireland can address that concern or issue. In the context of QIF developments, we've alluded to the Alternative Investment Fund Managers Directive, and that's to apply from the 22nd of July of this year, and QIFs will become QAFs, which are basically qualifying alternative investment funds. Ireland is already AIFMD compliant, so our products are ready to go in the context of AIFMD, and I think it's going to be a huge advantage for Ireland, the fact that we have very much a self-managed investment company regime, as Antonio alluded to. What that means is that the fund company can be both the fund, the alternative investment fund, but it can also be the alternative investment fund manager. And the benefit of that is that all of the AIFMD regulation, or the majority of it, applies at the level of the fund rather than you as asset manager. And that gives you two choices in the context of setting up a product in Ireland. You can set up a product as a QIF and grandfather, as Marcia alluded to, and in fact you can grandfather for 2 years up to 22 July 2015. Alternatively, you can set it up as an AIFMD compliant product, in which case you'll have the ability to passport your product across the European Union, thus avoiding any issues with private placement rules in each of the national jurisdictions. And this is probably the greatest advantage that the fund is going to have over Cayman in the context of your distribution capabilities. Obviously, there are a number of European jurisdictions, France, Italy, the Scandinavian nations, who are not particularly comfortable with Cayman product, and therefore Cayman product has to rely on reverse solicitation to avail of investors from those markets. Whereas the Irish product, whether it's the QIF, which won't have those issues but will have to privately place, or it's the passportable AIFMD product, which can simply passport in and won't have to focus on national private pricing regimes. It just gives the Irish product huge advantage from the perspective of you as an asset manager distributing that product. In the context of Ireland, we have very streamlined redomiciliation procedures, so obviously we have seen a lot of redomiciliation from jurisdictions like the Cayman Islands, like the Channel Islands, to Ireland, and so it's very easy if you chose to move your Cayman product to Ireland and redomicile it and immediately move forward with your passportable product pursuant to AIFMD. I've already alluded to the minimum subscription amount. So if we move on to the next slide, and the motivation for AIFMD. Basically, it was politically motivated, and this was driven by a concern that the hedge fund and private equity fund industries had a systemic risk for the European Union, and I suppose the Commission and Council of the European Union wanted to ensure that they were more aware of what hedge funds and private equity funds in particular were undertaking in their activities in Europe, and were concerned about ensuring that they could protect the European Union and its financial services industries in particular in the context of their activities. And so the AIFMD basically introduced common rules for alternative funds and their managers in the context of their activities in Europe. Basically, the directive is going to increase investor protection through supervision and reporting by the European Union regulators and reporting to them. Again, there is the alignment of interest in the context of remuneration, aligning the investment manager's interests with those of the fund, so as to ensure that there isn't any reckless trading, which, while it might deliver a short-term gain, ultimately damages the fund. And it also will provide a greater degree of transparency to investors in the funds in the context of the information they receive, either through the offering document, the prospectus, or indeed through ongoing disclosure in, for example, the audited accounts. And it also provides for ongoing disclosure to the regulators, so that the regulators know exactly what the fund is investing in and the activities it's taking, so that it can simply monitor that activity and judge systemic risk, if any. Moving on to the two most popular structures, the first structure there in the slide is the unit trust structure. That's probably a little less popular than the variable capital company, but it's certainly a popular product at the QIF level, where, for example, Brazilian asset managers are looking to invest or use strategies that invest in single assets. So a unit trust allows that, whereas a variable capital company, even at a QIF level, will require you to invest in at least 2 to 3 underlying investments. In the context of the unit trust, it isn't a legal entity in its own right, so it's created by establishing an Irish management company that will enter into a trust deed with the custodian or trustee to the fund to constitute the fund, and then that Irish management company will appoint you, the Brazilian investment manager, as investment manager to the strategy, appoint an administrator to, as Antonio mentioned, calculate NAV, etc., and potentially a distributor for distribution of the product, particularly if it's a retail type product. And then the trustee, manager will enter into most contracts on behalf of the fund, but the trustee may be entering into security arrangements where it gives security over the assets with the management company acknowledging that presentation of security. Moving on to the variable capital company, this is by far the more common strategy, very popular particularly in the context of selling to European investors. As Antonio mentioned, this is essentially a self-managed strategy, so although we have included reference to the Irish management company, which you can do in the context of the company, generally the practice is for the company and its board of directors to directly appoint the Brazilian asset manager, administrator, custodian and distributor if you're proposing to appoint one. So that's a very quick synopsis of the fund structures and availability in Ireland. Obviously both the unit trust and the corporate fund can have cells. So the unit trust has various sub-trusts and the fund company has segregated cells similar to the position in the Cayman Islands. Maybe at this point I can hand it back to Pat to round up.
Okay, thanks Paul. Hopefully folks over the course of the last 45 to 50 minutes you've got a sense of the following. One, that there is indeed a full capability here across a full range of investment strategies, instruments, and service requirements. And I think, again, a point that was very well made earlier on is trying to understand from your own business strategy point of view, what is it you require. Our own experience would be that the flexibility that exists here to really act as a partner to investment managers who are trying to be successful in getting product out has been one of our key success factors in the last number of years. And I think in the world that we're in today, we actually think that Ireland is very well placed. And what I mean by that is that we're clearly in a move where there's a shift to regulated products. We've been providing regulated products in both the UCITS and in the alternative space for a very, very long time. Indeed, the Central Bank of Ireland was the first jurisdiction in Europe to come out and to accept application forms under the new Alternative Investment Fund Managers Directive, as Paul alluded to earlier on. That's very consistent when you think that we were the first jurisdiction to provide for regulated hedge fund products in the past. I think that a move away and clearly transparency, governance, regulation is very important. All the points around the way in which we have done our business, the way in which we are a regulated entity is very important. And I think that that mixture of the regulatory reputation, the existence of appropriate tax treaties means that it is a very, very easy place to make sure that the types of returns you want to get to your end investors in a comfortable and regulated environment exist. It's important probably also to say that, in the world that we're in and the way we all realize that capital can be hard to raise, that an ability to get to outcomes speedily and to have your service providers driving the process as much as being spectators in it is very important. And I know from the comments that I've received, and I do spend a lot of time traveling to various countries in the world, we get very, very strong feedback in that regard. Indeed, we had our conference here in Dublin last week, and we had a number of managers who had exceeded their 20th anniversary in terms of having funds based here in Ireland, and I think that that's a testament both to a strong understanding and an ability to be culturally dexterous to deal with varying people's needs. I think the point as well that were made earlier on about doing your due diligence, we would absolutely encourage and welcome people to come and to do that deep due diligence. It's only by looking in the whites of the eyes of the people that you're going to deal with that you have a good sense as to what the real after-sale service is going to be. And that's when this is very important, is once the fund is up and running and you're trying to figure out new ways and processes that you can make it real. So ultimately we would really see ourselves as being a strong prospective partner. We hope that you get a feel for our capabilities, and we'd like to open it up now if there are any questions on the line, please.
Thank you. If you'd like to ask a question at this time, please press the star or asterisk key followed by the digit 1 on your telephone. Please ensure that the mute function on your telephone is switched off to allow your signal to reach our equipment. Again, please press star 1 to ask a question. We'll pause for just a moment to allow everyone to signal. As a reminder, ladies and gentlemen, please press star 1 to ask a question. We will now take our first question from Bernardo Musi from Citibank. Please go ahead.
Hi, everybody. My question is related to the way to distribute funds to Asia or European clients. I would like to know regarding the local regulator in those countries, what is the step-by-step, for example, to start a distribution in an Asian country like Hong Kong or Singapore, because of course they have their local regulator that must allow the distribution of such products. So I would like to hear a little bit about this process to start the distribution of a product in those countries.
Sure, it's Paul here. In the context of, say, particularly Hong Kong, as you correctly identified, it does need to be registered for sale in that jurisdiction. The Irish UCITS product, and indeed UCITS products generally, have been actively registered in Hong Kong for distribution for 10, 15 years. And so it's approximately a 2 to 3 month process in the context of Hong Kong and registering your UCITS for sale. So the first step is your UCITS fund is authorized, you have your authorization letter, and then you go to the Hong Kong regulator, potentially using local counsel to register your fund for distribution there. So that's the UCITS fund. In the context of a QIF product, you are looking at a private placement regime, so it can't be registered for public distribution. Potentially that may change with the Alternatives Investment Funds Directive and the passport there. Obviously, the UCITS product, when it was initially created, was designed for distribution across Europe and has now become a global mutual fund product for distribution across the globe, including Hong Kong. And the hope is that with AIFMD and with the professional investor passport that provides for, that ultimately we'll be looking for it to become a similar product that could potentially be registered for sale in jurisdictions like Hong Kong for distribution to professional investors. In the context of the European Union itself, well, it's a very streamlined process with UCITS funds since UCITS 4, as I alluded to. Basically, it's a 10-day notification process where you notify your own regulator that you want to distribute in other European Union jurisdictions. Subject to meeting some minimal requirements in that regard, you can start to sell that product in those jurisdictions within 10 days. The professional investor passport, once in play, will hopefully be as an efficient a process. And so in the context of Europe, the Irish products are both going to be and are extraordinarily attractive.
Great, thank you.
As a reminder, ladies and gentlemen, please press star 1 to ask a question. We have no more questions in the queue.
Okay, folks.
Sorry, sir, we just have one person just queued up for a question.
Oh, thank you.
Alessandro Farias from Santander, please go ahead.
Hi, everybody. When you mentioned about the place, you mentioned that there are some few restrictions regarding investment policies. I just want to ask you to develop a little bit more about these restrictions. What are the restrictions regarding the place?
Sure. This is again Paul here. It's really in the context of specific strategies. So, for example, in the context of an equity fund or a bond fund, there are no restrictions. You set the restrictions. But in the context of, say, a hedge fund's product, once you pass really 50% of investment in one underlying fund, you fall within the feeder fund regime and have to start to look at greater disclosure in the context of the feeder fund. So it's more in that side that there are restrictions. It's not restrictions as such, it's just considerations as to what the product is and how you're trying to sell the product. So in the context of a standard UCITS or standard QUIF product that you're trying to set up and sell, basically you have full remit in the context of exposures, leverage, etc., even concentration. But it is these smaller idiosyncrasies in the context of the strategy. Also, as I mentioned, in the context of a variable capital company, there is a provision in the Companies Act for that entity that there is risk spreading, and that's been interpreted to provide for investment in really at least two underlying assets. So again, that's going to sort of no more really than 50% in one asset to meet diversification. Unit trust doesn't have that restriction. So those are really a couple of the points on investment restrictions. Beyond that, there really isn't any investment restrictions for QUIF funds.
Okay, thank you.
Thank you. And it's Pat here. I think that because you have both the UCITS framework and indeed the alternative investment framework, which is, as Paul very clearly pointed out, for qualifying our professional investors, that is why there is that differentiation in terms of the rules and restrictions apply. I'm very conscious of time and the fact that you've been very generous to take an hour out of your day to be with us. I hope that over the course of the last hour that you've got a sense that, number one, the expertise that exists is not a new expertise here. Indeed, we have both firms, individuals and funds that have been operating here for well in excess of 20 years. That has thankfully seen us grow as a jurisdiction, as a regulated jurisdiction that is very, very well recognized. And really what we would ask is that as you consider your business strategies for international diversification and for international distribution, to bear us in mind in that we do believe that we have a number of solutions that can be very, very significant additions to the way in which you develop your business. We just put up on the last slide some contact details for myself and Renate. On that note, I would very much like to thank you for your time and to wish you well. Good day.
That will conclude today's conference call. Thank you for your participation, ladies and gentlemen. You may now disconnect.